Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks for joining me on this Wednesday afternoon market recap. We do have about an hour left in today's session. However, we do have a couple of stocks that are pricing in some interesting movements. A couple have hit our targets, still continuing to break out others. And overall, the markets have continued once again to the upside. This is absolutely fantastic. We have been, of course, pricing ourselves off from both of these two most recent pullbacks that we've seen in the market. We've anticipated it, we've acted, and now we're really reaping the benefits of the market continuing higher. It doesn't matter whether or not you entered these trades late April or into the beginning of May. Overall, these trades are really beginning to price in some rather extraordinary returns, whether or not it's the diamonds, the SPYs, or the Qs. All of these trades, the market indice trades with those call options, are really paying off quite significantly. Now today, with about an hour left of trade, we are up 226 points. If we start looking at the weekly candlestick, pay attention to this. We're up very close to 400 points, and you can see that we are very close on the Dow Jones Industrial Average to actually breaking above the swing high, which was really priced in 2 weeks ago. So once we do push above this level, this is coming in just below 25,250. It really opens up the doorway, first of all, that we are then pricing in a series of high lows that we've already recognized and also higher highs. But also running and potentially galloping up to 26,435. This has been the trade setup for quite some time. Again, this is on the weekly time frame. So if my chart looks a little bit off, it's because each one of these candlesticks represents that of a week's worth of trade. But you can see the risk and reward ratio, just the breakdown of all of this open space, which is essentially reward and the very limited risk. And that risk being, of course, the upward, or at least the positive side above that of the separating point of where generally we have been focusing on placing our actual stops. So what we can do is begin dragging these up on the industrial average, whether or not you can also apply this to, of course, the S&P 500, or if you are in those SPY calls. The only difference is that the S&P 500 compared to that of the Dow Jones has actually broken above that relative swing high. So again, it doesn't matter or not, if you've priced yourself in more so towards the late end of March, if not early April, or even during this most recent pullback in the month, or at least last month in the early period of May, or again when I spoke about the market putting in a false break to the downside and potentially pricing in that reversal at this green rectangular box. All of these trade plays are working out, and again what we're doing is we're capitalizing on the market just continuing to push to the upside. I've spoken about a lot over the past number of months about these open windows, the magnet, so to speak, of dragging these markets and pulling these markets continuously higher. I understand at times it has been hard to sit through. I don't control the market, obviously. However, really this period right now is all of the reward that we are getting paid for during, that period of essentially just being patient and just sitting with the market, letting the market to sort of shake out a lot of the buyers and sellers, a lot of that sort of temperamental environment of a lot of that back and forth choppy sideways period that we've had to sit through. And now this is where we get paid as technical swing traders. So this is the best time, really, as technical swing traders. You're seeing the markets essentially trend, or really at least begin to definitively push off these support areas. So far today, the S&P is up 27.5 points, but definitively we have now broken above this swing high, and it opens up the door. It may not happen, obviously, in a linear line, so to speak, like this. We're obviously going to have to sit through a bit of chop as well during this rise higher, but you should be focusing on those SPY positions, or at least the S&P 500 market indice, running all the way up to 2,852. Now, a quick recap on the daily close of the NASDAQ yesterday. We have priced in new all-time highs, so we've actually overshot the high where we were in the month of March 2018, which is fantastic. We hit our first target at 7,467. This is off these two entries here, and also a continuation or entry over here that I have since deleted. These have all been bullish trades, and you can see the market just continuing higher. Our target was the open window. That open window has been closed. However, we didn't really slow down here. We slowed down a little bit prior to closing the window, but really over the past 3 or 4 sessions, the market has taken off. And this is quite good to see, because what we're also seeing is the Russell 2000. Now, again, we've identified this a number of weeks ago. We called this either an ascending triangle or a symmetrical triangle. It didn't really matter because this is a continuational type of pattern, and it is in the direction of the trend. And what we did is we made an extension from this triangle, and we projected it to give us our target. So our entry was as low as 1,594, a subsequent re-entry at 1,641, and I expect the Russell 2000 to trend all the way up to 1,726. When we get here, we are going to have, again, a sincere discussion as to, first of all, closing out of these positions, and then seeing how the market reacts, because there's a good chance the dynamic and the sentiment Okay, of these markets collectively, if the Russell rallies all the way up to 1,730, if the Dow Jones has the strength, all right, to continue up to 26,435, if the S&P 500 has enough momentum in it to take it up to 2,852, I'm going to share with you maybe a sentence or two, I believe, at this particular point that a lot of people may be jumping in and chasing it right at the very end of this push higher. As the sentiment was very bearish, okay, down in these areas, that's where you want to be taking on, of course, those bullish trades. And then as the sentiment begins to shift and everyone becomes rather euphoric on the market, that's where you want to, first of all, be rolling out of positions and then sort of standing on the sidelines and waiting for true confirmation on the markets to either break out above their respective resistance areas. Again, we're seeing that on the NASDAQ, or potentially a major rolling pattern. But before we can move on to that next chapter or that next stage, we need to close these gaps. And really, that's been the narrative on this YouTube channel for quite some time, or at least over the past couple of months. But really happy about the way the markets are playing out. You need to be congratulated, so I congratulate you for those of you taking those market positions. But also, we're seeing a lot of individual stocks continue their movements. And what has been a major surprise this week that's really essentially come from left field is JD. I mean, we were speaking about JD over here at 36.12 as a potential pullback trade and then a bounce. And this is to do with simply this setting up bullish divergence, and it was looking like this is an exhaustion gap. I've gone through the analysis a few times publicly and also privately in that pro analysis class. 37.22 was also sort of a continuational entry. We saw it pull down through to Friday last week, but what's happened over this week is that volume's exploding and the price action has moved from more or less the 35 handle just below it. And you can see that over the past 4 sessions, okay, so Friday through today being Wednesday, we're all the way up here at $40.48. I believe that this is made from the low over here up to this point over here. Over 10%, it may be bordering on about a 12% move on JD in the space of 4 sessions worth of trade. This is exceptionally phenomenal, especially when you're tying in call option derivatives. This again has been a major surprise. But it's just playing off the analysis that we have been originally, working with on JD, and this is working out fantastically well. We have that of a W pattern. It's looking like that of a double bottom. And for those of you who took the trades, this was more so through the month of May. You are being very, very nicely rewarded at this particular point. I needed to update you on this. We are up another $1.61 with about an hour's left of trade during Wednesday's session. Now, if I take this one step further into Boeing Airlines today, we hit our target. This was a very quick trade. We were triggered into this on Monday at 361. Today we hit our target at 369. So this is a very quick $8 on Boeing Airlines. Just a really decent trade. It was looking like we had a little bull flag continuation. This was off from those rising exponential moving averages, and we had also a really nicely sort of defined resistance area up here. This is why our target was at 369.17. So we tagged that today. You should be out of Boeing Airlines, and that has been another rather profitable trade, which is doing well, or it has done well, and it has given you, of course, a little bit of money to put in your back pocket. Now, also, if I continue with some open orders, I can recap Amazon. Amazon is continuing to trade. You can see this. Breakout entry 1,640. Today it hasn't really gone anywhere. It is down slightly, but you can see we're up here at 1,695. In fact, we pushed above 1,700 intra-session. So this has already moved $60, okay? $60 of intrinsic value into those call options on Amazon. I'm receiving a lot of emails, and I have to make this public. I am receiving a lot of emails with people's concerns, or at least questions, saying, well, can I enter into Amazon now, as in Wednesday or even on Tuesday? And my response to that is no, you should leave it. And that is that's really a standardized response. It's not just targeted for those people emailing me. The entry point was 1,640, and it was there for a reason, okay? Use this as a learning opportunity for breakout pivot points. You don't want to hesitate. You just want to go with it when price action begins cracking above critical areas of resistance, like what has been sort of priced in for Amazon most recently. If you are fortunate enough, or if we are fortunate enough to see Amazon pull on back down into this pivot potentially, well, then we can talk about re-entering into this trade. But for the time being, you should be just leaving it alone and just letting the trend take care of itself, all right, as this continues to push on up higher. So we are close to breaking above definitively $1,700 on Amazon. Now, the stock above it is Apple. Apple today is looking to slow down a little bit. However, it is still rather profitable. You can see our past 3 entries, 183, 184, and 190. Okay, 190 is the most recent trade. This was a mix between that of the close on Friday and the gap up on Monday. So you might have been triggered in the 191, 192 handle, but we are still up pushing towards 193 at the moment. We do have an open gap that I need to reference. So there is a chance that we do pull on back down. to about 190.38, but all things considered, with Amazon trending, with the Nasdaq pushing up to fresh new all-time highs, Apple breaking out, we've got other tech companies doing quite remarkably well. Also, this is looking as if Apple wants to trend. And if I bring up, of course, this particular indicator just here, the ADX and the CCI both are looking good. The ADX support the trend, and the CCI is holding above positive 100 as well. So things are looking good, and of course we are holding up above the exponential moving average, mixed with some pretty decent candlesticks as well. So very happy about Apple, happy about Amazon. Another company that's doing similarly well is that of Netflix. You can see we are just continuing to trend. We are up above 342.34. This was the breakout price again. You can see collectively, whether it's Netflix, Amazon, or Apple, that once we've pushed above these pivots, these three stocks haven't looked back, have they? They've just simply continued to trend, and I don't really expect that to change all that much. Yes, we can see obviously a little bit of resistance continue to form on the Nasdaq. Very rarely do you see a clean breakout above an all-time high. Generally, the market will get stuck moving sideways, so to speak, for a couple of sessions. Again, just to shake out buyers and sellers. But with these individual companies, anyway, they're just continuing to trend, which is very strong. It's a signal of strength. And you don't want to fight the trend. And I wouldn't also be looking to jump into Netflix. Again, a lot of people, I mean, the most common emails this week I've received is Apple, Amazon, and Netflix, and also Boeing Airlines most recently. And a lot of people emailing in about JD because of that most recent spike to the upside. So all things looking very well, very happy. And also today, by the way, I can give you a very quick update on HD. You can see that it's just holding above 191.63. We identified this in Pro, and we're looking at this moving up to 204. Okay, it's obviously going to be contingent on what the markets do, but for the time being anyway, you can see it's obviously holding above 191. I'll move this over just so you can see this a little bit better. It's holding above this resistance area. It looks to be cracking it. We've got some pretty decent white candlesticks as well. And even on the pullbacks during today's session being Wednesday, it is continuing to be bought as well. So that's why we've got that long lower wick. It does look like a hammer, or at least a hangman at resistance, pardon me, but at the same time, this lower wick is also definitively a buying pivot, and that's why it does show a lower wick. It did sell off, however, it reversed, and the buyers are driving the price back up towards the top of the candlestick. So pay attention to HD as well. If we do continue above this, we could see a very quick and abrupt move up to 204.88. If you are not in HD, I would encourage you to leave it alone as well. You have to define your entry point, stick to it, and then just monitor the trade as it continues, or at least manage it. You don't want to be chasing trades. You don't want to be finding yourself caught in, or at least second guessing yourself after a trade sort of moves beyond either higher or lower above that predefined entry point. All right, so you don't want to be hesitating. You just want to be acting once you are confident with the analysis, and that's why we go through this analysis as the market is closed over the weekend. Less noise, and we can just look at this detached from the market noise and just break it down when the market is rather quiet, and then just execute with those contingency orders during the week when it chooses to do so. Now, Tesla today has gone a little bonkers, up $21.65. We're not in a trade either direction on Tesla. A little bit of a surprise, pardon me, on this move. It was looking as if, especially during Tuesday's session, that we were going to see a roll and potentially break 272. Didn't happen. Decent volume today. Pay attention to this. We are back to this pivot point at about 310. So if we see potentially a reversal, an abrupt reversal, which again I wouldn't price out of the equation when it comes to Tesla, that could be a pretty decent short, but at the same time, I'm not prepared and not willing to go long on Tesla as well. And to conclude with today, we've got GLD. GLD is just simply still moving sideways. It is respecting this bullish trend line, but at the same time, it's not gaining any friction at the moment. So just something that we've had to continue to hold from about 122.68 ideally. We still haven't pushed above 127.87 or 123.87, but it looks as though once again we've got a base building on GLD. So this is rather exciting because it's a move that hasn't eventuated yet, but it's still looking quite good structurally. So that's going to do us as at this Wednesday market recap. If you have any questions, continue to email in success@pivotpoint-trading.com. Other than that, everyone, enjoy your Wednesday evening, and I'll be back with you most likely tomorrow, if not on Friday, for another market recap. All right, all the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.